Not in my usual studio, but I wanted to check in with you guys on these markets which have clearly broken down. And I talked about this in my last video, that we were looking at invalidation moves for the continuation of the bounce that we saw 2 weeks ago. And today we have broken through those levels one by one, slowly eating away at support. And where will we go next? Well, I'm going to give you a level here that we have to hold on the S&P 500, or we're going to go back and completely annihilate that huge green candle and go back and retest the lows and potentially make a lower low. Now, ultimately, these markets can come back that 35% that I talked about, and the S&P 500 can be well beneath 500. I talked about that in the last couple weeks, and if we can't hold 511 tomorrow, I don't see why we wouldn't go on and get down into the 400s on the S&P 500. Now, some people are going to hear that and they're going to say, okay, I'm loading up on puts because clearly Josh is telling us from a technical standpoint that the markets are breaking down right now. Well, one, we actually haven't closed beneath that 511, which would be the ultimate loss of support here recently. That's the last line in the sand. It's the last line of defense for the bulls, but we haven't broken it. But even if we do break it, I'm going to share a problem with you that the bears need to keep in mind, and that's the fact that we have a market that is easily moved by this president. So all he needs to do is to come and share the progress that's been made on World War tariff and show that there is big de-escalation occurring, right? Which probably there is, which means imminently, when we look like we're in our darkest moment, we know that the powers that be can be buying that panic and fear, waiting for the release of that good news, and the response would be the markets would rip again. It would crush the bears. It would make these secret bulls with inside knowledge very, very rich, and it would just shake out a lot of people who went from having calls, they flipped over to getting into puts, they didn't win on the calls, and they're very likely not to win on the puts. And you're like, Josh, what should we do in this extreme uncertainty that you're describing? Well, two plans for you that I think will likely work. The first one is my A+ trade setups in the Stocks with Josh Discord. These have been golden, and they're scalps. And so it's very hard to swing trade this market, which is typically defined, or even to day trade the market. But I think day trading is probably more predictable at this point. But swing trading, which is basically a trade that you might have over a couple of days or even over a couple of weeks, that's going to be the hardest to predict, and it's going to be your highest risk. For me right now, it's easier to take these scalp trades, okay, right at the open where the market is breaking down and trending down all day long, like the one that I gave you this morning on the S&P 500, and all three of them printed today, but they're very easy to take. All targets hit, 1, 2, 3 plus, the markets went lower. So that's what's working right now. But if you were to hold that same position overnight, yeah, it might be profitable, or it could get wrecked the very next day on a single post from the president. The other thing that I think makes sense right now is to look at long-term investing. You know, very rarely do you get an opportunity to buy some of these companies that I think have largely already bottomed out. And a couple big tech companies may not make lower lows, right? We may not ever get an opportunity to buy them at the prices that we could have 2 weeks ago when the market was falling apart. Now, can I guarantee that? Absolutely not. All I can tell you about that is that there is, for me, it makes sense to buy in this extremely bearish environment, even if another day this week I might get it a little bit cheaper. I don't know that for a fact, and so I'm slowly accumulating. Now, I'm still largely cash. And I want to make a quick point about something I've been sharing with you guys. Back when we were in January and February, you heard me talk about on every single video, I talked about stop loss, tight stop loss, stop loss. Specifically on Palantir, I was saying back in the day, 118, right? I was giving stop losses on everything. Because at that point in time, when the markets were at their highs, stop loss was the way to win. Today, I'm not talking about stop losses as my primary focus in these videos. I'm talking about position size. Position size is the way to win, all right? Keeping your position size and your risk moderate as far as any of your trades go. As far as your long-term investment go, I would still keep moderate position size and get in because, as I said, until this World War tariff gets resolved, which it's not, until it gets resolved or until the economy gets bad enough that the Fed gets aggressive in cutting, until one of those two things happen, and it doesn't appear to be happening this week, the markets are likely to continue to decline. And so you don't want to be left behind because once you think you know the direction the market's going to go, typically you're wrong, okay? So you want to be buying a little bit on days that are red, not putting everything in, right? But you don't want to get too confident because the fact is we could easily go to that full 35% off, that historic bounce zone on the S&P 500, but I don't think we would be there long. Personally, I'm convinced that the minute we got there, there'd be a well-timed post on that capitulation day where everything feels like there's no hope. And we're going to find all of a sudden that volume swings from high selling volume to all of a sudden high green volume. Now, those who've traded with me in the Stocks with Josh live trade sessions, we've seen this happen in a single 5-minute candle that spikes and it's really red, right? And starts climbing bigger than all the previous candles. But all of a sudden, it flips from red to green in the last 30 seconds of the candle time frame. And that shows a shift or a capitulation moment. That's the moment we're watching out for. So on the S&P 500, the bull story is only intact with a daily close above 520. And the bear story gets way bearish if we close beneath 511. Then in my mind, I'm going to count it like we're definitely going into the 400s. The biggest catalyst event for this week is Tesla's earnings, because that's an AI story. And has in the past, it's been a pivot for the NASDAQ, right? And so it wouldn't shock me if Tesla came out with any type of positive surprise. It wouldn't shock me that we could see a bounce off of it. However, it's far less significant than what is happening with the tariff war or what is happening with the rates. And we don't really have any news on that yet. And so at this point in time, you guys have my game plan. It's about position size. I bought Nvidia today, some long-term leaps. I had some and I bought some more. Not a huge position size for me yet. But personally, these have time. A leap is an option for 2026. And so in my mind, down here in the gutter, I think this is going to be a great stock. I think it's cheap, and I think it can run up $10, $20, $30 in 1 week. You guys watch. In under 30 days, it would be super easy for this to recover $30, and it wouldn't shock me if it recovered that potentially even in a single week, okay? Once some of this trouble is behind us, this is going to be one of the companies that Wall Street's going to beeline towards. But at the moment, and I want to have a position that I feel comfortable with, and I didn't ignore it on red days. I want to have built up my position over the course of time. It also allows me to moderate what I'm doing and not to be rash in my position size if I buy a little bit at a time, right? You kind of know when the hour has become the darkest or most bleak. You know when to increase that. That'll come. It's not here today. We have the potential for more downside. But just be careful. What's working or what I think will work is my A-plus trade setups, which printed today, right? Those will continue to work because they're scalps, they're in and out. And then it's the long-term stuff. The overnight trades, those are very, very difficult right now. So we've got a couple big tech companies reporting earnings. We've got a little data that's important. But for the most part, we're waiting on news. And it's not a market that's climbing a wall of worry. No, the market's convinced. I've said that a handful of times, It is something I've seen in the markets before, but it didn't materialize. This market's convinced that it's a crap show because of this tariff war and because of sticky inflation. They're convinced of it, so now they need good data and good data alone to give them any reason to buy. So I'll leave you guys there with that. Thank you for joining me today. I'll be still traveling tomorrow, but Wednesday I'll be ready for live trading back in my home studio so that we can make sure that we can make some money together. Come and check it out. But until then, I'll see you guys in the comments section. I appreciate everyone who's watched the video. Thank you for dropping me a heart, and I'll look forward to seeing you in the next video. Peace and blessings. Take care.